A really good stock portfolio could be the key to true financial freedom. Today, I'm building my own stock portfolio and showing you step by step the very simple steps I'm taking to be financially independent. My name is Liam. I'm a Canadian teacher who spent the last year studying, investing, and preparing my financial plan with the goal of retiring early and living my life financially free. As I spent my time researching the many different forms of investing, I've narrowed in on a pretty simple method that I'm going to follow to build my financial freedom. This video is my breakdown of the process of creating a portfolio that you can build on your own. I will also be posting regular updates on this portfolio, on the strategy, on the stocks, and at regular intervals. So if you're interested in building your own financial freedom, please leave a like and subscribe to the channel. I post videos on the stock market and Canadian economy every week on this channel, and I would very much appreciate it. I first started learning about the stock market as a teenager. The 2010s were one of the easiest markets to invest in. As a young investor, I mainly just put names into tech stocks I recognized, and I was pretty astounded at the results. The one thing, however, I was really missing was a real strategy. I strongly believe that strategy is the most key piece of any stock market portfolio. It informs every single decision you make when choosing stocks, when deciding how much you're going to invest, and crucially, choosing how long you're going to hold on to your investments. Without a real strategy, I often find myself making easily avoidable mistakes, such as aggressively investing or investing with the hope of short-term gains. Every time I've made a mistake, however, I was taught a super valuable lesson, and I hope I can share with you in this simple breakdown how I'm going to build my portfolio going forwards. So step one, very simple, pick your strategy. In order to do this, you need to have a goal in mind. My goal is very simple. I want to live off the income generated by this portfolio. That means that the income should cover all of my expenses, accounting for inflation for the rest of my life. So how am I going to achieve this? Well, I'm going to focus on something called dividend growth investing. If you're familiar with this concept, please feel free to skip to step 2, and if not, it's pretty easy to explain. The goal of dividend growth investing is to pick companies that will consistently raise their dividends year on year. That way, the compound growth chart can look something like this. Think about Royal Bank of Canada, one of the stocks we've talked about recently on this channel. If you pick a company like this, and you have the option to reinvest dividends, you can find yourself in a really good position over the long term. I mean, just ask Warren Buffett how his Coca-Cola shares are doing. Right now, they're getting paid $776 million a year, which is about a 60% return on his initial investment every year. This takes me to step 2, choosing sectors. I put this at number 2 because I have a tendency to overinvest in certain sectors like tech. So when building a portfolio for the real long term, I need to make sure diversification is built in. As a Canadian, I have some significant incentives to invest heavily in my own country, specifically the Canadian dividend tax credit that lowers the effective rates on dividends. Super important for this strategy. However, if I invest in my entire portfolio into an economy the size of Canada's, I'm exposing myself to significant risk in the case Canada's economy underperforms. So while investing in Canadian dividend growth companies is the obvious choice for me, I will also be investing a good chunk of this portfolio into American companies that will offer more capital growth in the long run. So the starting allocations that will probably shuffle around in the future will include 35% Canadian banking. This industry is incredibly strong, well protected by legislation, and has a long track record of providing solid dividend growth. Then I have 30% for Canadian resources. So this includes things like railways, pipelines, which have historically been stable beneficiaries from the natural wealth of this country. Then we get 30% in American equities, mainly focusing on growth opportunities as I start this portfolio, but still being focused on the end goal of either being able to reposition into dividend payers or potentially get paid out a dividend from these companies in the long term when their growth potential is kind of done. Finally, I'm going to keep 5% in cash, specifically in US dollars. As a Canadian, this is a mix of hedge against the currency, so the decline of the loonie versus the increase of the dollar, and it's a rainy day fund in case of a market crash or another opportunity where I need to have that money ready to invest now. The final and most important step, in my opinion, is picking what specific stocks or ETFs to invest in. Here's a list of stocks that I've picked to start the portfolio. Some of these we've talked about in videos, Some I haven't. So for each, I'll give a basic reason why I chose that company compared to their competition. First off, Canadian banks. The first and most obvious choice here is Royal Bank of Canada, ticker symbol RY. This is the largest company in Canada right now and has a really impressive track record of dividend growth, which we talked about a little bit earlier. I think when it comes to large cap banks, this is an obvious choice. And over the last several years, the market has agreed, giving Royal Bank stock a premium in contrast with its peers. Our second bank on the list is National Bank, ticker symbol NA. This is a stock I have not talked about on the channel yet, but it has recently been making quite a name for itself. This company has been growing at quite a clip over the past decade, and it cemented itself as the sixth big Canadian bank, expanding that elite club. I think that track record shows really solid management and a clear offering to customers that will probably see National Bank continue to grow solidly into the future. The third and final bank on this list is Equitable Bank, ticker symbol EQB. This is all about potential for me. They're who I believe has the best shot at disrupting the banking industry, and so having a position built in that company allows me to profit even if they start taking market share from the other two investments. They're also a huge proponent of open banking, an idea I personally think would be pretty revolutionary, and with the kind of time horizon I'm looking at, I should be prepared for. Next up, the natural resource stocks. First on this list, Canadian National Railway, ticker symbol CNR. This company moves an incredible amount of freight around the country, and alongside their duopoly partner CP, they completely own the Canadian freight industry. That means that these shares are essentially earning a dividend on every bale of hay, ton of coal, and other natural resource extracted in Canada. Picking a railroad specifically versus investing into a specific producer of some good allows me some built-in diversification. If one mine fails or one harvest is weak, my investment will still be strong. Second on this list, we have Enbridge, ticker symbol ENB. I know oil and gas stocks are not a popular move right now, but I think this company might have a real opportunity in the long term. They have a really strong position, and in the future that looks more and more unstable, having strong North American energy production might be worth paying a premium. I also think that similar to the railroad, owning the method of transportation is a strong way to spread out the associated risks versus investing directly into oil producing companies. Third on the list, Pembina Pipelines, ticker symbol PBA. This company, very similar to EQB, is my disruption play, and again, it offers a solid current business with a low multiple and strong returns, as well as the opportunity for game-changing expansion. This time, the expansion comes in the form of Trans Mountain Pipeline. I think if there's any large Canadian company ready to take control of this asset from the government, it's Pembina. And if they do, it just might end up being the most important asset in my whole portfolio. Third category is American stocks. And this is where I'm going to diversify myself out a bit. Because when investing across the border, the best opportunities for me are going to be in growth stocks. So I'm going to be investing into the S&P 500. I know, that's a boring choice. But I genuinely think that just having a stake in the largest economy on the planet is the way to go. Over time, I will probably pick out specific companies that I think present an oversized risk-reward ratio, but when starting this position, I need this to be a core part that I don't want to lose any of, and with the small amount I have to allocate right this second, I really need to pick something safe, diversified. Some final thoughts. With these stocks finally picked, I've set the foundations that I will use to build this portfolio. I know what companies I want to invest in, I've set some solid guidelines, and I've made sure I'm really focused on my goals, and I know what my long-term strategy is. If you have recommendations for other stocks that I should add to this portfolio or at least look at, I plan on updating this series every month, so please drop a comment. Let me know what you think should be added to this portfolio, or where you think I should switch things up in the long run. With that being said, that's all from me today. I hope you have a great one, and I'll see you next time.